While swings on the last trade, the sensex and the nifty end flat after a choppy session.
Mid-caps and small caps see sharp cuts. The mid-cap index is down over 3% from its record highs. The small-cap index is down over 9% from its peak.
Shares of Aditya Birla Capital rise after announcing the merger of Aditya Birla Finance with itself. India Mart also rallies after Jefferies reiterates a positive stance and expects stronger revenue growth till FY26.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points and all of the market action that you need to know in terms of today's trade and everything that you need to be aware of so you're geared up for tomorrow. I'm Surabhi Upadhyay and with me is Nigel D'Souza. Nigel, quite a day today, especially the broader market.
Indeed, the broader markets is painting picture altogether. You know, that sort of a day, if you look at the headline index, it said ended more or less flattish, but we look at the broader markets and there was a lot of pain beneath the surface. You know, if you just pull up actually three stocks, HDFC Bank, Reliance Industries and TCS, they batted for the bulls. And because of that, the Nifty ended more or less flattish. If it wasn't for these three big names, we would have been down easy, more than 50 points in today's trading session. Well, a couple of other notable points then. You had the IT index that did pretty well. So that was a index that did outperform in today's trading session. While on the flip side, the relative index has gone one way, rocket up. Today that index was under pressure. You had stocks like DLF that were under pressure, and the relative index was one of the biggest casualties, down close to around 3.5%. But everything aside, the big pain is in the broader markets. I
believe that there are only not two but three truths in life: death, taxes, and gravity. And I think the third point was playing out today. The gravity bit was really playing out today. In fact, just to put things in context, I mean, the kind of fall that we've seen today. So today's fall, let's look at it across all parts of the broader market, starting with the mid-cap, and that was actually the best performer if you look at what happened as we go down the market capitalization ladder. So the mid-cap index fell about 1.5%. The small cap index was down almost 2%. So if you update these as the final tick came in, the cuts are even slightly deeper than what we're showing you right now, almost 2% on the small cap index. The micro cap index was down over 2%, almost 2.5%. The BSE SME IPO index, and this is where a lot of rumblings are going on in terms of maybe regulatory action coming, that index was down almost 4.5%. Now, distance from the peak, the market has been cooling off. So what has fallen the most and what has fallen the least? The mid-cap index is actually only down 3% from the peak. If you look at the small-cap index, it's down about 9.5%. The micro-cap index is down 10.5%. And again, it is the SME IPO segment that is where, almost a little bit of, if I could use the word panic, was going on today, down almost 13.5% from the peak. The problem with the market is the market breadth. At no point in time are we seeing buyers come back in. If you look at the advanced decline ratio, just like yesterday, Nigel was making this point yesterday on the show as well, that the lines crisscross in the morning and they remain, far spread out, not converging at all. And that's the problem. The problem is a lack of confidence. These things usually resolve themselves. They take a couple of days, and then you have buyers coming back in once the so-called froth is out. But at least today, we did not see any evidence of that happening. So we're going to talk about these trends and, of course, a lot more in terms of individual stocks, all the individual news flow as well. Let's tell you what's on the lineup for today. Well, we'll start off with some of the key movers and shakers. We'll have Vivek joining in, and I'm sure he'll also pick out some green movers, not all red. There was some green as well. So we'll talk about some of these. Stocks of the day are AB Capital, Cipla, and ITC, and we'll tell you why in just a bit. Then we get to D Street chatter. Nimesh today is looking at Adani Ports, and that was buzzing around in trade. We'll get you some of the data points around it. And last but not the least, all the events to watch out for tomorrow. But first up, all the key movers and shakers of the day. Vivek, over to you.
Well, thank you so much for that. Like you mentioned, bit of a struggle to find stocks that ended in the green today, given the kind of weak breadth that we had. But first stock, like you mentioned, top gainer as far as the Nifty was concerned was HDFC Bank. In fact, the stock's been doing quite well in the recent past, up for 5 out of the last 6 trading sessions. The second stock that we were looking at is Balkrishna Industries. Now, yesterday, this particular stock fell on news of, a raid on the company's corporate office in Mumbai. But despite that, today the stock rebounded quite sharply, up almost 4.5% in the session. The next stock on the radar that did quite well during the session, gave up a little bit of gains, was India Mart. Jefferies went ahead and reiterated its positive stance on the company, and the stock, managed to end with gains of 3%. AB Capital, analysts believe that post the merger of the NBFC arm, will be something where you'll see the holding company discount go away, and on the back of that, the stock continued its up move trajectory. On the other hand, a lot of stocks as far as the losing side was concerned. First set of stocks, the entire PSU back. Take any PSU name today. You did see the Kotak report yesterday talking about very elevated valuations. Today, a lot of stocks, have a look at SJV and NLC, a lot of stocks that have been doing quite well, took it on the chin today. The next set of stocks that we're talking about is the real estate pack. The real estate pack, all of the real estate names with weightage, significant weightage as far as the realty index was concerned, all of them, DLF, Macrotech, Godrej Properties, all of them fell in today's trading session. Now, talking about individual stocks that saw quite a bit of selling pressure, Swan Energy, now this particular stock, saw a very volatile trading session. Towards the end of the session, the selling pressure accelerated, and the stock is now well below the QIP price of 670. The other stock on the radar was Cipla. Now, worries have emerged in terms of shipments of one of its key drugs, and on the back of that, delays are being anticipated. The stock ended low by 2.5%. BSE, this was another stock that saw quite a bit of selling pressure. Reports indicate that NSE, its competitor, has gone ahead and cut transaction charges. Some other news flow too has come in terms of resignation of some KMP. But despite that, look at the stock down over 2.5%. And lastly, Paytm, the stock today, down quite significantly. And in fact, in this particular year itself, it's down over 40%.
Okay, all right. Thanks a lot for that, Vivek. Well, let's get in our guest. Today we have Sudeep Bandyopadhyay, the Group Chairman of IndiTrade, as well as Jay Bala of cashthekiosk.com, who joins us on the show. Jay, let's come across to you first. Let's revise the levels, both on the Nifty and the Nifty Bank, support levels, and if you have any targets.
Yeah, right now I don't have any targets for Nifty, but I'm watching the support level of 21,860 as very critical because as we discussed last week, the small cap index has gone below the critical support of 15,200. So I'll be watching 21,860 on the Nifty as an important support. The resistance is at 22,500, and the next one is about 22,720. I think it's just academic. I think it's just a matter of time before the support gives in. That's how I'm looking at the markets. When it comes to the banking index, it's stuck between 48,000 and 45,600. A breakout on either side will decide the trend. And we're just watchful about the Nifty Private Banking Index, which is a critical support at 22,850.
Okay, all right. So that was the shape of the Nifty Private Banking Index and how some of the large banks moved. Let's move on and talk about one of the key stocks in focus before we get to our other guest as well. And this was Aditya Birla Capital. The stock was actually higher in trade. The board has approved the merger of its wholly owned subsidiary Aditya Birla Finance with Aditya Birla Capital. The proposed merger is, of course, subject to regulatory approval. So what does this mean? Why is Aditya Birla Capital doing it? Ritu is joining in with some of the details. Ritu, so this is basically, to ensure that AB Capital is in sync with regulatory guidelines?
Well, Survi, several objectives are being met because of this approved amalgamation of Aditya Birla Capital with its wholly owned subsidiary Aditya Birla Finance with itself, which will create, this unified NBFC in the process. One, it is going to be, yes, in compliance with RBI scale-based regulations that require that Aditya Birla Finance get publicly listed no later than the end of September next year. So this is actually coming in 18 months ahead of that deadline. Of course, like you said, it is going to be subject to various approvals, whether that is from NCLT, RBI, SEBI, etc. But after the merger, this listed entity that we have, Aditya Birla Capital, will get converted from the holding company to a operating NBFC, and Vishakha Mulye will assume the role of MD CEO and Rakesh Singh the ED of this merged entity. Now, the company says the idea behind this move, of course, apart from the RBI compliance, is to create a more simplified structure for a more optimal and efficient utilization of capital, and of course, the consolidation of business, which they say is going to result in long-term growth. The stock on an up move today, as we saw, Morgan Stanley has maintained an equal weight call with a target price of 196 per share. It says, the tangible economic benefits from the merger are not going to be very material, but it will lower the holding company discount. Jefferies is a bit more bullish. It has raised the target price to 225 per share with a buy call. It says the move will simplify the structure. It will lift the capital adequacy ratio by 150 basis points and, of course, remove that holding company discount. But keep in mind, the company's stake in Aditya Birla Sun Life Insurance is currently at 51%. That will have to be pared down, with the 50% cap on holding that we have. That's as far as brokerages are concerned. Also, remember that Aditya Birla is one company that is now compliant. The focus very much remains on Tata Sons as well, which also falls in the same category, is also weighing its options to comply with RBI directions without necessarily getting itself listed. How that plays out, RBI is going to have the final word.
Oh, yes, absolutely. Market doesn't tire of trying to second guess what Tata Sons will do in order to meet the regulatory sort of norms, whether it will list, whether it will find some other ways or not. Thank you, Ritu, so much for those details. Before moving forward, let me take this up with our guest, Sudeep Bandopadhyay, as well. Sudeep, hi. So what do you make of this? I mean, the market seems to be thinking that this is going to result in reduction of that holding company discount. But this event aside, I mean, what is your stance on Aditya Birla Capital as a stock?
Well, I think, apart from the holding company discount, the benefit, the way I see is simplification of structure and capital adequacy going up for the consolidated entity. I think that's positive for the business. Beyond that, I think Aditya Birla Capital has been ticking all the boxes recently. And, with the change in management happening very clearly, that they have been very focused on the business. They have the entire insurance basket, the health as well as the life which they have, and along with that, the asset management business, which also has started doing well. The lending book has been performing. They are digitizing to a great extent and trying to improve the efficiencies at all levels. Overall, I think at current level, if somebody is looking for a long-term investment in the financial services space, I think with Aditya Birla Capital, they get a slice of pretty much all the businesses.
Got that. All right. Well, staying with the Aditya Birla Group, then the promoters of Aditya Birla Sun Life AMC are likely to launch an offer for sale to sell 5% stake. Aditya Birla Capital and Sun Life AMC are required to pare down stake to comply with the public float norms. Sources say that Aditya Birla Capital could reduce its stake to 45%, while Sun Life AMC could reduce its stake to 30%. The company is currently holding roadshows with investors to gauge their appetite for the stake sale.
The second stock of the day is Cipla. Now, this was one of the top nifty losers today. It fell over 2.5%. This after a Phillip Capital report highlighted that the exim data shows export of albuterol sulfate inhaler from the company's Indore facility seems to have stopped since the US FDA's warning letter came through in November last year. Now, albuterol sulfate is estimated to be a $140 million opportunity for the pharma major in FY25. Phillip Capital expects a 10% decline in EBITDA and a 12% fall in profits due to this supply disruption.
Well, in the third stock in focus is ITC. The stock tumbled over 1% after its largest shareholder, the British American Tobacco, reiterated that it's reviewing a possible disposal of stake. Sources told CNBC-TV18 that BAT may launch a block deal as early as this week. Nimesh joins us to tell us more on that. Nimesh, what are your sources telling you?
Well, the sources are telling me that maybe you'll hear a large block in ITC very soon. So BAT, who's looking to sell up to 4% stake in ITC, the book may get launched as early as today evening and may get executed tomorrow. So that's the overall feedback from the sell side. A lot of buy-side analysts have been sounded off for a potential block. Now, the 4% stake in ITC from BAT is valued at close to 20,000 crores. It's a very large block, and the seed do anticipate that there could be a potential 6 to 8% discount as well in the block deal. Now, in terms of institutional holders, mutual fund combined own close to 10% odd. LIC is the largest holder, owns 15% odd. Suti continues to hold nearly 8% odd, and there is FI holding of close to 13% odd. So, from the 29% that BAT holds, they're potentially looking to sell 4% odd stake. So, that is a one large block deal which needs to be tracked and potentially can happen very, very soon.
Okay, that's ITC. It was in focus. Nimesh, thanks very much for the updates over there. Stock was way down pretty much throughout the session. Okay, before we move on and get some more perspective from our guests, let's also talk about what literally was the sector of the day. And the sector was the entire broader market, mid-caps, small caps, micro caps. In fact, the small cap index has fallen 10% from the intraday peak that it hit in early February. So what are the contributing factors? Which are the stocks that are bearing sort of, the maximum brunt? We have Hormuz joining in with the details. Hormuz, over to you.
Getting hammered left, right and center is the small cap index, and 5 out of the 6 trading sessions now the index has seen cuts of over 1% and back-to-back sessions now with 2% or more of losses in a single session. Now if you can take a look at this, the index on an absolute term is down almost 1500 points from that peak of 16,691 that it made on the 8th of February. And since then, only 14 out of the 100 small cap stocks are trading with gains. Some of them are trading with gains of even less than 1%. Now, more than 80 stocks are trading with losses, and out of those 80 stocks, over 35 stocks are trading with losses in greater than 10% since that 8th of February trading session. Now, the losses range anywhere between 10% to 35% in stocks like IIFL Finance, that is news driven. But if you take a look at, barring IIFL Finance, if you take a look at some of the top losers on the small cap index since the 8th of February, your stocks like SJVN, NBCC, Angel One, Suzlon, Phenol-X Cables, all of them have corrected more than 20 to 25%. But despite that, there are stocks like SJVN and NBCC that are trading well above their historical valuations. Take a look at SJVN as well. Despite the correction, it is trading at an FY25 earnings multiple of 25.7 times, which is higher than its historical average. Same is the case with NBCC. Now that is since the index topped out. Now if you take a look at the stocks on a standalone basis, the correction is even deeper. The SJVN made a peak of around 170. It's down 33% from those levels, and most of these stocks in this list are high momentum stocks. They went up around 200, 300% in 2023, and now they are seeing that correction of anywhere between 30 to 35%. And also, I'll single out a sector, that is the rail PSUs, the IRFC, RVNL, IRCON, RailTel, all of them seeing corrections of anywhere between 25 to 30% from their peaks. Multiple factors contributing to this fall. There was some amphi circular earlier, and yesterday the SEBI chairperson also mentioned that there is some froth building up in certain segments of the mid and small caps. Let's listen into what she had to say.
Are there some entities which are perhaps misusing that facilitative framework? We have received feedback that that is the case. The reality is that these are relatively small entities. The market cap is small, the free float is small. It is relatively easy to manipulate both at the IPO level and at the trading level. In terms of actual price manipulation, both at the IPO level and at the trading level, we are working to evidence that.
So yeah, she said two things. One, that there is froth in the mid-cap and small-cap market, and two, which is what caused the price damage in the SME IPO segment, that the market regulator is very actively looking at gathering more evidence where they think there could be price manipulation at the pre-IPO stage as well as the post-IPO stage. So that's the saga of the broader markets. Let's go back to our guests. Sudeep, what do you make of things? While obviously there's a lot of froth coming off and there's in general risk aversion, there could also be opportunities where, good companies are also seeing an erosion in price and perhaps offering better entry opportunities. So do any such names come to mind? Mid-cap, small caps?
Absolutely. I think, a lot of investors are looking forward to this correction. They have been waiting for markets to come down a bit because, in a lot of cases, the valuations had reached a level which was, apparently unrealistic. So I will talk about defense electronics, Survi. I think I love that space. There's a significant focus of government on Make in India. And under that, defense electronics is a very, very key component. Bharat Electronics is one stock which I've been watching, and I would love to buy that and recommend buying there when things stabilize a bit more. I don't think I will rush now. I'll wait for a bit more correction. The other area where I'm definitely looking at buying is PSU banks. I think again, this is a great place to be in, but the prices, including SBI, had moved up too fast. And bit of correction, bit of coming down of the prices was necessary. And once that happens, which is happening as we speak, I think it will be worth looking at the large cap PSU banks, particularly SBI.
Okay, all right, got that. Jay, final question before we let you go. Give us that one stock that you're looking at, in terms of either breakout or a breakdown.
Yeah, that would be Linda India, and Linda India is, in my opinion, is heading to fresh record highs past 6,800, somewhere close to 6,800, 7,200, 700, 7,000 to 7. That's the objective I'm looking at. As long as the stock can hold above 5,800, I think this trajectory towards 7,000 is underway.
All right, gentlemen, thanks a lot for joining in today. Wishing you all a good evening ahead. Thanks so much for giving a view on the index as well as on a whole host of stocks. For the time being, we slip into a short break. You come back, we'll get to a popular segment, D Street Chatter, along with all the top market events you need to track. Stay with us. Welcome back to Markets Forward. Well, let's get you some corporate voices from the day. Varun Alag, the chairman of Gurgaon-based Hunasa Consumer, said that they're aiming to capture the crore rupee personal wash market with their introduction of their new Mamaearth moisturizing lotion soap range. He added that they have seen an improvement in consumer sentiment in March. Meanwhile, Anil Yadav, Investor Relations Director at IRB Infrastructure, said that they already have an order book of around 36,000 crore rupees in hand, and with the help of the current order, their EPC segment can grow in the range of around 10 to around 15%. And last but not the least, the founder and CMD of Ethos, Mr. Sabu, said that they are aiming for a CAGR of around 20 to 25% over the next 5 to around 10 years. He also added that the Indo-Europe Treaty will help to improve their margins further. Okay, well, it's that part of the day when we get to your favorite segment, D Street Chatter. Nimesh joins us to tell us what's going on to dealing rooms. Nimesh, what's on your radar?
Hi, Nigel. So another day of underperformance in the broader markets. The micro-cap index was down another 2.5%. The small-cap index also added 2% lower. But in terms of individual names, the first stock on my list is Adani Ports. While the stock was marginally under pressure today, but I understand there are very strong buy flows from larger FIs. In fact, there were a few upgrades as well from sell-side analysts in Adani Ports today. So that's the first name. The second name is Nirlon. That's been consolidating around the 52-week highs. But there was a large block deal today. 2.5% equity got changed hands. And I understand a FI investor was a seller in today's block deal. The third name is SW Solar. This has been a big outperformer of 2024. There is a lot of QIP and HNI interest as well. But now I understand there's going to be a large block deal in SW Solar very soon. So that's something to track going forward in that stock. And the last name is Tilaknagar Industries. Part of the small cap pressure, that stock has actually been down 18% Y today. But at these levels now, some bit of HNI interest is back. And I understand for the last couple of days, some larger HNIs have been active buyers as well in Tilaknagar Industries.
All right, Nimesh, got that. Thank you very much for all the buzz from the dealing rooms today. And with that, we're almost at the end of today's show. But before we wrap out, let's talk about some of the key events that we need to watch out for in terms of trading action tomorrow. Manglam has that list. Manglam.
Well, I have a bunch of stocks that we'll be watching out for in tomorrow's trading session as well. HDFC Bank, a good outperformer in today's trading session, will be in focus tomorrow as well on account of expected FTSE inflows. The changes are effective from March 15th itself, and that in turn will impact the Nifty Bank as well. The Nifty Bank has its weekly options expiry tomorrow, so that's something on our radar. Infosys is the other one that we'll be watching out for. Did well in today's trading session, but again tomorrow is we'll be meeting investors in the Nomura Virtual India Corporate Day 2024 in the United States. IIFL Finance, the board will meet to consider a fundraise, And we'll also keep an eye out on Paytm. Has been under pressure and in the news for a lot of reasons. Vijay Shekhar Sharma will have a fireside chat at the Arkham India Innovation Summit tomorrow. So we'll get some conversation out from there as well. And Sanghi Industries, the news came in towards the end of today's trading session where Ambuja Cements will sell about 2% equity in the company, to meet the minimum public shareholding lines. And the stake sale starts from tomorrow all the way up until, till Feb 6, 2025. So those are a couple of stocks that we will be watching out for.
Okay, all right. Thanks for that list, Mangalam. And with that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates in just a bit after this break. Thank you for watching.